We start off with what fueled today's market rally, a huge step forward in ending the trade war. Kayla Tausche's in D.C. with all the details. Hi, Kayla.
Hey, Melissa, at least ending one front in that trade war, and that's NAFTA. The U.S. and Mexico finding some common ground on some of the more contentious issues like content requirements for cars made in the region and wages for workers making them. Also, the time frame of the deal. The U.S. says it'll be reviewed often and will last for 16 years. That's a big change from the U.S.'s prior proposal to have the deal expire after just 5 years. Mexico is calling it a comprehensive understanding, not a deal per se, but says it could stand alone if no deal is reached with Canada this week, though that is Mexico's preference, and the country was very clear. Here is White House economic advisor Larry Kudlow just a few moments ago on the prospects for a Canada deal.
We really would like a deal with them. There are a bunch of issues. We've been at it for some time. They know the issues. We know the issues. But I must say, from time to time, the president has said, if we can't reach a good, strong, fair deal with Canada, we might have to resort, the U.S. might have to resort to auto tariffs.
Those auto tariffs would be added to the steel and aluminum tariffs already in place on North America that were not undone with today's agreement, and also the possibility of another massive tranche of tariffs on China. That's really the 800-pound gorilla here, and it won't come into focus again for another few weeks. Talks between the U.S. and China last week ended with a whimper, and the White House moved forward today with an aid package for farmers hit by retaliation. You know, Melissa, a lot of people are trying to draw parallels between the NAFTA situation and that with China, saying that this is potentially a good signal. The difference is Mexico and Canada, they are negotiating a deal that has already been in place, that businesses already work within and like, and they're both willing negotiating partners. You can't really say that about China.
Yeah, very good point there. Kayla, thanks. Kayla Tausche in Washington. And with the record run, the record run rages on. The Dow crashing through 26,000 for the first time since February. Both the S&P and the Nasdaq making fresh all-time highs, with the Nasdaq cruising through 8,000 for the first time ever. So is this the beginning of the end of the trade war? And if so, what areas of the market can you still buy? Guy Adami.
Hi, Melms. Love that. It's like from that show on NBC.
The Apprentice?
That show. One of my favorites.
That makes sense.
Doesn't it?
Yes.
So, look, the fact that the S&P is now above the January highs at 2880 level or so, I think that's really encouraging. So what does it mean? Probably means we're in a new sort of parameters for the market. I do think we continue to grind higher. Caveat being, I just bring this up to bring it up, VIX was actually higher today. I won't make a big deal of it. One data is not a trend make, but it's worth pointing out. But I think Kayla hit it at the top of the show. He won the trade war maybe on half a front, but the China trade war is really where the Yankees beat the Orioles this weekend, 4 games. It's a big deal because all those games count. But you know what? The Red Sox are the team they have to catch. Same way. Yeah, Mexico's a big deal, but it's the Chinese we have to beat.
I think the environment has changed. So when everyone was so pessimistic with trade war, now you start to see the light at the end of the tunnel, and you want to buy the market. Running out of daylight going into year end, so I think it's still a buy. I want to buy the trade stocks underperformers.
So the stocks that we saw go up in value today, the industrials, the car makers, the auto part
makers. Car makers have been thrown out. When was the last time you got Ford under 10?
Right, and you had a weaker dollar today, which is going to help some of those multinationals. So I mean, I don't even know if this could be a melt higher, not so much even a grind higher. We can melt higher. If you think about it, we have the best performing economy in the world. We have a lower dollar, and you know that I believe that the dollar is the new VIX, so lower is better for economies. Our economy is going well. People are putting money into this country. Where does it go? It goes in the stock market, goes into the bond market. It would not surprise me to see a melt up based on this move forward.
We didn't even mention what happened in China in terms of the stability of the yuan helping the dollar go lower. We had the yuan arrest a 10-week losing streak, which is key when it comes to how the markets are perceiving where we are in the trade war.
Because it shows the policymakers there are rational players, and I've always believed that they are. In fact, I think the stability in their currency, Larry Kudlow talked about it in this last episode, but either way, they've been working towards being on the global stage as a clearinghouse, as a currency, as a place to do business. So I think they're going to do what they have to do, and they're going to separate it. But I think you bring up another interesting point is how about the rest of the world? Because when I think about a trade deal getting done here, and I look at Europe having underperformed the U.S. by 20% in the last year, and that's a much more important trade alliance than Mexico. Let's be really clear. And I think we want to get that done as well. So, I would be looking for some of those global trades, whether it's owning Germany in dollar terms, EWG. But either way, emerging markets closed above the 50-day. They have been assaulted, and much of that are Chinese internet names. Those are the places I would be looking right now.
Do you think this advance was too premature? Given this is an agreement, quote unquote agreement, because nothing's actually been agreed to with Mexico, not with Canada yet. So on your point of half a front, it's really a quarter of a front at this point.
It shows to me that there are, at the end of the day, constructive negotiations going on a bilateral basis, as we heard from the president. So that's encouraging. That will not be, look, the crux of the China trade discussions is unrelated to what we're doing with autos. And say what you want about steel and whatnot. It's all about technology. It's all about China made in 2025. Where we're very concerned about their desire to assert themselves.
But I think the market has to trade off of where they think the puck is going to be. So even though it's a quarter of it, we had zero.
No,
we had zero
hockey
last.
Metaphor. Skating to where the puck's going to be. Sorry.
So we had
so
zero
the puck's
last.
out there. You
Right.
go,
Right, to where you think it's going to be, not where it is. So we had zero last week. We have 25% of that trade tariff talk. Now we start to see, is it going to be short covering? Is it going to be the unwind? Is it going to be rotation? Probably all of the above, and I think you have to be in the market.
But what's the bigger deal here? NAFTA or China?
Oh, well, China, of course,
China,
but that's what the market's anticipating that. Right. Here's the mentality right now of portfolio managers. Do I want to wake up tomorrow and there's some movement on the China front and all of a sudden the stock market's up 2% and I'm underinvested? That's the fear. That's the FOMO right now. And that's why I think you could have a melt up. Now, whether or not we get a China deal is irrelevant today to investors because they're trying to anticipate, as Steve mentioned, where that little disc goes. It's a hockey puck, correct?
What's very interesting here, though, is, again, we've put off any real China till after midterm elections, or so it seems. And that's very important, I think, for this administration. And by the way, with good news happening here, maybe this is the best thing that they could have.
Or have we? Or are we going to see it?
That's what the Chinese delegation
That's what they said.
They didn't send until after midterms.
Right. So we can see they're playing as hard a ball as Trump is playing here, and I think they have to.
Balls and pucks. It's too confusing.
It's all sports metaphors.
But you mentioned this being underinvested and the notion that something will happen in the trade war and the markets will melt up 2% easy.
Right.
That could happen much more so in China, a market that's down, about 20% year to date. We see something happen. We saw in the Shanghai Composite overnight where we had stability in the yuan, and all of a sudden it was up almost 2%.
You're going to have a 3 or 4% move, and absolutely, without question. But who's better suited to play the long game at this point, the Chinese or us? And I would submit it's the Chinese. President Xi doesn't have to run for re-election ever. He's got the job as long as he wants, frankly. Our guy's got to run again in a year and a half. So I think they're far better suited. And quite frankly, they probably have a lot more leverage than we think they have.
So here's an ultimate would you rather, and I'll give it to the ambassador since he's probably the best equipped to handle this one. U.S. markets at all-time highs or the Chinese markets right now?
If the U.S. continues to chug higher, the rest of the world's going to do better. And as we like to say, you make the most money when things go from horrible to just bad. And I wouldn't even say it's horrible, but these are oversold, again, on a relative basis. If you did the ratio of the EEM against the SPY or the EWG, Germany, against the SPY, these are extreme levels of oversold.